Thank you. Don't worry, I have only two charts. You have seen enough of me. But I'm very, very pleased to be able to delegate this presentation to two of our best executives who are driving these businesses of this extraordinary, interesting, exciting business of pet food into very, very strategic region. I have only two charts. One chart is the total pet care categories going at just above 5%. What I want to say, I think we presented to you our North American business last year or 2 years ago. And today we are very pleased to show you, and you know that we are the leader in North America, to show you how in EMENA, the zone Europe, Middle East, and LATAM, we have been able to make extraordinary inroad in this very exciting category. And that's why my second chart is just to show you where the growth will come from between now and to 20. And you see LATAM EMENA will do, if you look at this, about 50% of the growth in pet care. So it's a big play. It's a very interesting play, and I'm very pleased that it's very, very well led by two people, and they will show you what they are doing to win in that space. Thank you.
Thank you. So good afternoon, all of you. It's a pleasure to have the chance to present to you another love child of the Nestlé family after Nespresso and Nescafé, coming now to Purina and starting with Purina in EMENA, Europe, Middle East, and North Africa. So you've seen in Patrice's chart, the market is big. It's 22.5 billion in sales, the total market value. It's about 2/3 grocery, 1/3 specialist, which is a conglomeration of different channels, pet stores, vets, breeders, e-com. And we have a share of about 22.5, so shortly below 25%, 1/4 of the market, but growing fast. We've gained about 100 basis points in the last year only in grocery. There is more than 200 million cats and dogs in Europe, a bit more cats than dogs, and you see that the cats population is growing a little bit faster than the dogs population. And if you look at what is really important for us, which is the calorific coverage, which is the percentage of the calories intake by pets that is covered by industrial pet food, as opposed to table scraps or home cooking, you see very various figures from 3% in Egypt, which is the lowest in the zone, large population of cats in Egypt, but very little coverage by industrial pet food, up to 93% in Belgium. You could say the mature markets like UK, Germany are very high up, and then you have Russia at 31%, Italy in the middle, so still a lot of potential growth coming from an increase in the calorific coverage of pets' nutrition. Now, looking at our business, we've had very strong, profitable growth over the last 15 years, and here you see the last 10 years, a clear acceleration of our growth, and with profits growing even faster than our top line, and you see our profit growing by 480 basis points over the last year. So I'll spend a few minutes detailing this, first showing that in fact this comes from operational savings in total delivered cost, about 30 basis points per year, as well as in SG&A, 15 basis points per year, that has been reinvested in marketing spend behind our brands, about 30 basis points per year, as well as in improving our bottom line, 40 basis points per year. So a virtuous circle clearly at play here. Now looking at our share, I said we have 22.5% market share. This is all channels, but if you look and zoom on the biggest channel, which is retail, where we have the Nielsen data, which are the most reliable, you'll see that our share is actually even higher in retail. And you also see the gap with our competitor narrowing dramatically. Going back 15 years ago, they were double our share. We had about 20, they had about 40, with a 20 points gap. Now the gap has diminished by a factor of 5, down to 4.3 points, and even if you look at the last period, it's 3.7 points. So leadership is definitely now a realistic goal. This is total Europe retail. Zooming now on Western Europe, And 15 years ago, this was pretty much the whole market because industrial pet food was very, very small in Eastern Europe. But Western Europe, the gap was the same, 20 points between us and the competitor. And now we have taken leadership. In 2015, for the first time, we are leaders in Western Europe. We've created a gap that in the last period is 120 basis points. Where we still have a big gap versus competitor is in Russia. Russia, which was not really a big market 15 years ago, has become a sizable market and is still growing fast. And there we had a huge gap of 75 points, basically. We have a very small, less than 10-point share 15 years ago. And now we have reduced that gap half, more or less, to about 46 points. But growing really fast, especially a clear acceleration of our share gains in the last 3 years. And if you look at the last period, we're now 26, 27 points of share in Russia, where we used to be in less than 10, 15 years ago, and then, as you see on the chart, around 10, 15 for a long time. Now, what has driven those improvements in our top and bottom line? The first thing is a massive transformation of our portfolio. We look at our portfolio as accelerate, defend, or fix. And if you look in 2002, barely 13, 14 years ago, we had 26% of our business in accelerate, so high margin, high growth, 43% in defend, but a good third of our business was a big question mark. So we had to either fix it or exit this part. And this is basically what we've done. As you see, the portfolio last year, in 2015, was 2/3 in accelerate, high growth, high margin, 24% in defend, and practically nothing left in fix. And I'll come to that later on and show you what we have fixed. We've also simplified our SKU counts. We came down from 12,000 down to 5,500 by streamlining the portfolio, going for common brands across Europe with multi-language packs. We've also increased dramatically the euro per kilo, or the Swiss franc per kilo of our sales, going from 1.3 to 3.1 over the same period. And we now have a whole portfolio that is concentrated on 5 brands, 5 power brands that represent 80% of our sales. This is Felix, Friskies Gourmet, Purina One, and Purina Pro Plan. Our largest brand is Felix. Felix comes from an acquisition we made in 1999 with the Spillers acquisition. It was originally only strong in Northwest Europe, mostly UK, Benelux, Germany. And we've now expanded thanks to our regional model where we use a common strategy and a common marketing drive across Europe. We've expanded the brand in various waves, starting in 2010 in the south of Europe and Central Europe, then again in Italy, and you can see with the different colors covering the whole of Europe over a period of basically 10 years. At the same time, thanks to an iconic spokesperson, which is our black and white cat, as well as superior quality and palatability of the product, we've gained share, and now we have taken leadership clearly over the last years in the wet cat single-serve segment of the market, creating a gap of 4 points versus the nearest competitor. Now I want to show you what Felix stands for, and this campaign here is remarkable for 2 things. First of all, it's a good example of a very consistent communication strategy over the years, where we've used consistently this animated, cartoonish cat, black and white, which is mischievous and will do anything to get the best food possible. And at the same time, this ad is also showcasing an innovation, a very important innovation for us that has worked extremely well in Europe, which is the first time you have wet cat single serve, so wet cat food, but with a topping, a crispy topping to be added by the owner on top of the food.
Right, Felix, Mum's out, so what do you fancy for dinner? Mum says you love your Sensations Crunchy Crumbles. Sensations Crunchy Crumbles. Oh, Sensations Crunchy Crumbles. Felix? Pour the meaty pieces and add the crunchy toppings for a new crunch-tastic meal experience.
I see you found his favourite.
I had some help. Clever cats get new Felix Sensations Crunchy Crumbles. Purina.
So you see why this brand is so successful, unstoppable, very cute character, and also great products and great innovations. Now, I was talking about the transformation of the portfolio. So in more details, we've cleaned up the portfolio in a manner that is quite extreme, because we started with enormous quantity of brands coming up from all these acquisitions we made, Spillers and then Purina. And then we decided to concentrate on those brands that had potential for the whole of Europe, as well as merits from either technology or positioning. So we stopped a lot of brands, like you see here, Arthur's, for example. Some of them were quite big. We concentrated on promoting super premium dry cat and dog food rather than economy or mainstream. We moved the whole market progressively from multi-serve canned wet food to single serve, and this has required massive investments, as well as the grill technology that is proprietary to us. We exited private labels. We focused on Felix, as you've just seen. We're now moving aggressively into snacks, which is a small but growing part of the market. And finally, last year, we exited accessories by selling that business. And as a result of this, we've seen an acceleration of our growth, which used to be around 2% to then 3%, and now more than 6% on CAGR for the last 5 years. So, second key success factor that is explaining our success and our growth of share as well as business is innovation. And here you see the impact in net sales of our innovation year after year. So you have the baseline in green, then you see the innovations launched in 2011 in yellow, the blue, light blue ones in 2012, in 13 in brown, then in orange in 14, and in dark blue in 15. And what you see here is that first, innovations are successful. We generate between 140 and 160 million Swiss of value or sales with our innovations in year 2 or year 3. They don't disappear. You see that over time these innovations consolidate. And on top, they don't cannibalize. And you see the baseline in green is flat over the years, which means that innovations come on top and do not take away from the baseline. Next key success factor, premiumization. Back to something that we've seen in other categories. And you have in pet food 2 types of premiumization at play. The first one is premiumization within the brand. A good example is Gourmet. Gourmet traditionally was cans of 200 gram, flat cans, that were sold at 2.4 euro, here it's Swiss per kilo. And then we've launched the small cans, 85 grams, and we launched Gourmet in pouches. Then we added value through specific textures, as well as sustainable fish variants. And finally, we've launched soups. Soups in pouches at a price which is 4 times higher than the original can. So you see this premiumization in Swiss franc per kilo over the various innovations that we've launched over the years. And the next one is bringing people through the quality levels from economy to mainstream, and then mainstream to premium, premium to super premium. And this is a good case here in dry cat food, where the Friskies brand, which is our Defend brand, is sold at 1.5 Swiss per kilo. And we've progressively managed to transition consumers from the Friskies brand into the Purina One super premium brand, which retails for roughly twice the price, thanks to strong palatability, pet appeal, but also now branded active ingredients. Last key success factor I wanted to mention is the digital acceleration. We've been prime movers in digital. We are working extremely fast and well, both with social platforms as well as e-com players. And this is the example from the UK, which is the biggest market for e-com sales in pet food in Europe. even higher in penetration than the US, by the way. And you see in red at the top is our share online. And light blue at the bottom is our competitors' share online. This is from Nielsen. And you see the gap, 620 basis points. The two lines in the middle are the shares offline. And you see that offline, we're fighting for leadership with the competitor. We're more or less at the same level. But online, we've created a huge gap thanks to our prime moving into social and digital. Now, going forward, we feel very confident we can continue to generate this strong growth both in share and in sales. And this is also due to our strong pipeline of innovations based on health benefit platforms, very much linked to what you saw this morning with Patrice and Stefan. First, brain health. I think this was mentioned already by Patrice. The Pro Plan with MCTs to fight against dementia or the equivalent of Alzheimer in dogs. Cognitive function starting to diminish after 7 years old for dogs. And obviously, a lot of elderly people want their dogs to live as long as possible with as much of their quality of life as possible. So this is gaining importance. Obesity, there's an increase in obesity in dogs and cats. And obviously, weight management going forward will be a very strong platform where we also have great research going on with great potential. And finally, immunity. This is a great example that we are launching this summer in a matter of weeks. We will have Purina One relaunched in Europe with NRMs, which are functional bacteria. So think of it as heat-treated probiotics. So for the first time, we will have sort of probiotics in our dry cat product, boosting immunity for cats. And immunity is very important for cats because they are very sensitive animals, and you cannot see when they have an immune system that is down, but you will see that their digestion, for example, can be impacted, and this product will reinforce their immunity and therefore their digestion. Now, natural has been a question we heard with Fernando on the PetCare stand this morning at the exhibition from you very often. So what are we doing? We're doing a lot of things. The first thing is building the Purina brand as a competitive advantage, reinforcing trust in our corporate brand. The second one is adding natural cues into our existing portfolio. You see here the example of Cat Chow being relaunched in Europe with basically a natural recipe and natural claims on the pack. We're launching Beyond in the UK after the success of the US. We have Merrick now joining our portfolio. We'll see what we do in Europe. And the last frontier is probably to go towards customized natural foods, but this is more for the future. There are some trials going on in the US. Now, I was talking about building trust in the Purina name, brand name. How many of you, raise your hand, have a cat or a dog at home? Yeah, so practically half the attendance. Well, I think all of you that have cats or dogs or had in the past, you will understand how much the bond is important between pets and their owners. And this is really where we feel we can make a difference, because we believe that when people and pets bond, life gets richer. And this resonates very strongly with our consumers. So that's why we have this Purina in Society journey. We have defined 10 commitments that we take towards pet owners and society. Here you have them. And these commitments, we will live by them, but we will also engage with society, with NGOs, with pet owners to make the world a better world for pets and people. And for this, we launched our first Better with Pets forum in Brussels in February, where we launched publicly the commitments. You can see the panelists. Some of them were four-legged. And we had there 80 scientists, NGOs, authorities, bloggers, media, all discussing this bond, the richness of the bond between pets and people, and in particular the concept of One Health, which is a concept I'm sure you will hear more of going forward. The fact that you have to look at the health of people in the same system as the health of animals and the health of the environment, and that there are a lot of interactions between the health of people and health of pets. So we have obviously an impact on the health of pets, but the pets have a big impact on our health as well, potentially a very big positive impact on our health. So at the end of this forum, we launched a movement on social networks. We are better with pets. I want to show you, before closing, a short video explaining you what it is all about. You see this video, celebrities from 9 countries around Europe that are known for their engagement, their motivation to do something about the pets-human bond. For example, for UK-based people, you will recognize Claire Balding, very famous person in the UK, but very committed to the health of pets. Here it is.
Arise, sleepy pet lovers.
Oíd la llamada, amantes incondicionales de los perros.
Возьмите с собой своих четвероногих друзей.
Open the doors to your shops and cinemas.
Schafft Platz für sie in euren Büros.
Füllt eure Näpfe mit Wasser und heißt sie willkommen.
Explicad al mundo cómo los gatos quitan el estrés.
Dogs with cancer-sniffing superpowers.
Et les caresses apaisantes diminuent la tension artérielle.
And heart rate.
Sie sind Gesellschaft für die Einsamen.
И о том, как они дарят нам улыбку в минуты грусти.
Etwas Einfaches wie Zusammensein.
Could help us all. If you believe pets and people are better together, then join us and make your commitment. Let's make the world better, one human at a time.
So this is a movement we are launching right now. And as a conclusion, my 4 key takeaways is that we've had 20 years of success, of profitable growth and continuous market share gains. We strongly contribute to the NHW agenda of Nestlé as a whole, because our entire business is about NHW. We have the Nestlé, the nutritional foundation on all our products, competitive advantage on more than 2/3 of our products. So it's strong contribution as well to the premiumization strategy. Our ambition is to be the most trusted name in pet care, becomes a market leader in grocery in Europe, and continue to be a strong growth contributor. And the future growth will come from engaging with pet owners with health-enhancing solutions that are underpinned by this corporate trust in the Purina name, which is our competitive advantage. So thank you for your attention, and now Fernando will take you through PetCare LATAM.
So good afternoon, and thank you for being here. Somebody said that I was moving quickly into the danger zone 1.5 hours after lunch, so I will try to get us out of the danger zone. Bernard and I built these presentations so that they wouldn't be repetitive, so my presentation is somewhat complementary to the things that Bernard had to say. But above all, you're going to see that our strategies in Latin America are very much aligned with the strategies in Europe, which are very much aligned with what we're doing in the US and in AOA. So we are one company facing the market. Before I get started, I just wanted to share with you that I've been 20 years in the group. I reluctantly say that I'm a veteran, but I guess with 20 years you have to say that. 10 years in pet care in total, and for the last 5 years in pet care Latin America. And it has been a great adventure. If we look at pet care in Latin America, it's really a story about top line and bottom line growth over the last 5 years on a very strong basis, and I'll be sharing that in some detail in a few minutes. It's also a story about great products and above all, great brands. And it's also a story about people and a great culture. Our company has grown tremendously over the last few years, and on average, for you to have a sense, the age of our associates is 35. So it's a young company, very dynamic, very agile, very exciting. So I wanted to kick it off with that and start sharing, not the disclaimer, but the story of our company. On the top left corner, you see the numbers that Patricia already shared, that we're a $7.5 billion category in Latin America. But probably the most important statistic on this chart is the two numbers that come after the 7.5 billion, which is that roughly 2/3 of our business takes place in what we call the specialist channel, and 1/3 takes place elsewhere. It says grocery there, but it really includes club class of trade as well as wholesalers and so forth. But the real important number is the percentage of business on the specialist channel. The specialist channel is where veterinarians live. It's where people who influence the category live, the small pet shop owner, really the people who develop the category. And they develop the category with a passion for the category that's difficult to find elsewhere, because these are folks who are very interested in the health of the animals. That's a really interesting dynamic. You saw in Europe, it's the opposite of that, the two numbers. So it's very good. In terms of the numbers of cats and dogs, I'm not going to get into the details of that. What you see that there are lots of cats and dogs. Order of magnitude is similar to Europe, similar to the US, which means that we have tremendous business potential. And I'll talk about our market share in a little bit more detail in a few charts. When we take a look at one of the key drivers of business potential for our business, as Bernard showed for Europe, it is caloric conversion. So caloric conversion or calorific conversion is a measure of what percentage of the dog's or cat's nutritional needs are being fulfilled by commercial foods, foods that are 100% nutritious and balanced. In Latin America, we were at about 31% about 10 years ago, and now we're in the 40-45% range. To give you a perspective, Western Europe is in the 70-80 range, North America is in 90 range. So we have grown a lot in terms of calorific conversion, and we have yet a lot to grow. The other component that's really important about this is that we have tens of thousands, possibly hundreds of thousands of new households entering this category on an annual basis. And we see it at Nestlé Purina as one of our key missions to make sure that those consumers who are entering the category for the first time have the greatest, possibly the best experience they could possibly have in terms of solutions that they can find, in terms of the quality that they can find, in terms of food safety. That's our job number one in Latin America. And you'll see that we're doing a good job of that. So, super attractive category for consumers because they're finding the solutions that they're looking for. In Latin America, 70% of consumers indicate that pets are members of the family. That's slightly higher than in the United States and about the same as some countries in Western Europe. So the pet culture is already developed. Retailers love the category because it has high penetration, yet the caloric conversion is low, which means that it has a lot of territory to grow, and we're bringing new households into those retailers. And from a Nestlé perspective, as you saw today, nutrition, health, and wellness is such an important component of what we do. And this category is 100% about nutrition, health, and wellness. The vast majority of our products, with the exception of some snacks, are 100% nutritious and balanced. So it is a category that's driven by nutrition, health, and wellness. How are we doing in this world of caloric conversion, of new households coming into the category? Well, if you take a look at growth rates versus our key competitor, we have outdone our key competitor over the last 5 years, and our growth rate, MPP here means Nestlé Purina, we're not only are we higher than our key competitor, we're also higher than the category. So overall, we're gaining share in the category. When you take a look at that same chart in terms of market share, you can see that we've gained a substantial amount of market share over the last few years, and we are starting to get very close to that key competitor. Where is this share coming from? It's broad-based. We are either number one or number two in every single market in Latin America. And obviously, our ambition is to be number one. So we're working to be the number one in Latin America in every single country let's say in the near term. Like Bernard, I think there are a couple of very important components to our secret sauce. One of them has been to focus on a few brands. So some time ago, we determined that there were 7 brands that we wanted to make sure that we wanted to either maintain them as large brands in the portfolio or brands that we wanted to plant the seed in order to drive growth in the future. These are the 7 brands that we chose back then. And what we've done since that time is increase their weight in our portfolio from 57% of sales to close to 70% of sales. And obviously, continue increasing that in the near term. And we've decreased the weight of the non-strategic brands. That's key because the strategic brands have a better margin structure. They have better pull in the trade, better consumer relevancy. So being focused on those strategic brands improves the entire value chain of our business in a substantial manner. Innovation and renovation is key. We have 7 brands. We want to make sure that they're up to date. We want to make sure that those tens of thousands or hundreds of thousands of consumers entering the category on an annual basis are always finding the solutions that they should be finding, the greatest solutions. And so we've designed our organization to significantly improve our ability to innovate and renovate. For the last 2 years in a row, we've been able to either innovate or renovate close to 60% of our portfolio. Now, this doesn't mean that we're adding a ton of SKUs on top of it. It means that if we want to add a new technology to dog chow, a new piece of communication on pack to dog chow, we're able to do that on an annual basis. The other real neat thing about how we're doing innovation renovation is that it's the same from Mexico to southern Chile or southern Argentina. Every single country has the same communication, the same product design, the same everything. And what that allows us to do is to move really fast in any one market and still leverage the scale that Nestlé brings to us. So as a consequence of that, the activities that we've been doing, as well as the great tailwind that we have from the category, we've been able to grow sales about $600 million over the last 5 years, which is a CAGR of about 21% on an annual basis. Our profit has improved faster than our top line at 31%, and we've been able to gain close to 500 BPS in market share. So things are working well. We're gaining the scale that we need to have, and we're able to deliver on some of the, or all the key parameters that the company is really looking forward to. But we have to look into the future, and can we get the next $1 billion worth of growth with what we're doing in the category and the activities that are going on? And when we look at the drivers of the category that we've had up to this point and the next 5 years, I have to say that I see caloric conversion or calorific conversion continuing to increase. It is true that some of it is driven by macroeconomic situation, but even in countries like Brazil today that have a tough macroeconomic environment, we continue to see the caloric conversion increasing because consumers are becoming more and more sophisticated. They have less and less time, more time spent in traffic or working at their job location, so forth. So they're looking for those solutions. So caloric conversion will continue increasing. The pet culture is already incredibly strong, one of the strongest in the world, and that will stay with us. And channels are developing. Retailers see the opportunity here. A few years ago, 2 or 3 years ago, difficult to find pet food in a convenience store in Latin America. Today, it's difficult not to find pet food in a convenience store in Latin America. So new channels are developing, and that will be a driver of growth for the future. So if today we're $7.5 billion as a category, we believe that over the next 5 years to the end of the decade, there will be another $5 billion worth of growth, about 11% on an annualized basis, which is a substantial amount of growth yet to come. And we are going to go about capturing our fair share, at a minimum, our fair share of that growth, but we feel that with the strategies that we have in place and the success we've had over the last 5 years, that we're in a good position to capture more than our fair share. We're going to continue focusing on our key brands and developing those brands. Product innovation is critical. I'm going to share a couple things there. Industrial capabilities is important. It's important that we have local manufacture of these products, that we're close to where they're being consumed, and you'll see that we're making tremendous progress there. And culture. We're a young company developing very quickly. As we develop new regions, sales regions, and so forth, we have to hire all new people. If you build a greenfield factory, it's new people to the company. So maintaining the culture that has kept us moving in this direction is really important. And you'll see that our culture is quite unique. I'll also share a quick video on that. No brand is more important to our portfolio today and in the future than ProPlan. ProPlan represents the best that we can do as a company. The best technologies, the best positioning. It's an incredibly important brand. It's driven by primarily the technologies that we can put in there. And we've developed proprietary technologies for puppy stage, for a senior stage, for mature dogs, and so forth. The latest technology that we are including, and actually in Latin America we're the first ones to do it. This morning Stefan talked about MCTs. We have MCTs in Bright Start in the US. We also have some studies that take MCTs to a different level and allow us to make even harder claims. So last month we launched a neurological care line, ProPlan therapeutic line in Latin America. And I can say that the response from the veterinarians who saw this product has been outstanding. And that's what's going to continue driving the growth of ProPlan. We also have the #1 brand in the premium dry dog segment, and that's Dog Chow. Dog Chow represents today roughly half of our sales. It has had growth over the last 5 years around 25%, so it's accretive on the growth side. It's also accretive on the profit side. It's just been a fantastic brand for us. And Dog Chow leverages the key insight in Latin America, and that is that pets are a member of the family. I'm not going to talk a ton of it. I'm going to let the commercial do the talking. This is the latest commercial in which we're launching our new weight management and senior age product line, and you'll see how it connects with the member of the family positioning.
En Purina Dog Chow sabemos que cada perro es único. Los que necesitan manejar su peso para romper las reglas, los que necesitan su movilidad para ignorarlas, y los que necesitan crecer sanos para aprenderlas. Para cada perro hay un Dog Chow, como nuevos, standing en forma, edad madura y cachorros. Es más que un perro, es familia.
So every time we do a new communication, new product launch on Dog Chow, the reception is fantastic with the consumer base. I think the positioning today in Latin America is right on with what consumers are expecting, and especially these tens or hundreds of thousands of new consumers coming into the category every year, looking for somebody who understands that my dog is a member of the family. So it's very exciting to see that. We have the #2 premium cat brand in the market, and that's Cat Chow. It has also been growing in the mid-20s range, so it's accretive to our growth, and it's doing extremely well. What we've done in the last about 12 months is we have restaged Cat Chow to be the first brand to bring not only taste palatability to the cat segment in Latin America, but we're also bringing a nutritional or functional component to it, which we're calling Defense Plus. So this is the first and only premium brand that delivers not just taste, but also a functional benefit to consumers. And I'm also going to play the video because it really brings to life the new positioning.
Cuando se trata de pequeños aprietos, Tigre es bueno en protegerse a sí mismo. Pero cuando se trata de su salud, Alejandra lo protege con el nuevo Purina Cat Chow con Defense Plus. Una combinación exclusiva de nutrientes que fortalece su sistema inmunológico y lo mantiene saludable. Nuevo Purina Cat Chow con Defense Plus. Porque su salud depende de ti.
So if any of you live in Latin America, you will have noticed that in the last 12 to 18 months, the shield is everywhere. We're using that icon to execute this positioning at point of sale, on the internet, on pack. And it has, again, delivered really great results from a growth perspective. We've seen this brand accelerating substantially. From a capital investment or industrial capabilities, it's important with the growth that we have that we retain our ability to supply the market. Somebody asked me earlier on in the innovation session, what did we do when we couldn't supply? And the reality is that's the advantage of being part of the Nestlé group. If we do not have the local manufacturing, we bring it in. We bring it in either from the US, from Europe. We have a lot of flexibility, and this has allowed us to move extremely fast in our new launches or in covering production gaps. We've tripled our investment in the last, if you look at 2011 versus 2014, 15, we've brought it up to a pretty substantial level that has allowed us to build a greenfield facility in Mexico, which we launched last year. We're launching a greenfield facility soon in Chile. It's under construction right now. We're expanding our wet production in Brazil and Mexico, and we pretty much have expanded production capabilities in every single facility that was already existing. And we've done this all while maintaining real tonnage growth on the business with the top line growth that you saw. So as you look into that future of the calorific conversion and where the category is going to go, we are in a good position to continue supplying the fantastic brands that we have. And finally, I think culture is one that sometimes gets ignored, but culture is incredibly important. Recently, I was rereading something about Peter Drucker, and he said that culture eats strategy for breakfast, meaning that people really have to understand what they're doing and why they're doing it. We have a young organization that's growing very fast, and one of our biggest risks is that we lose our culture, that somehow we cannot keep that glue of what brings us all together. The other component we're really trying to leverage is keeping a very entrepreneurial spirit that we have in our company, capable of leveraging the scale that Nestlé brings to the party. And I have a video of an initiative that has been going on for some time, but we did a sort of milestone event last year with the top 200 associates from the company, and that now has been spread to all 2,700. And I would just share that with you. You get a sense for what it is that we're doing. So that gives you a quick summary of what we're trying to do. It's really, really powerful as we're bringing new people in the company to see what we're trying to do, and it has so far worked really well. Obviously, there are a number of things behind this that are necessary in order to implement it, but for expediency today, I just kept it really short. So in conclusion, we have a really attractive category with a lot of potential for profitable growth ahead. The key here is consumers in Latin America are becoming more and more sophisticated. They're looking for those solutions, more specialized solutions, which will bring profit to the entire category and continue to do so. We have a lot of potential sort of pent-up demand in the future. You saw the $5 billion in retail sales dollars that are in front of us. And I think that we're well positioned to capture at least our fair share of that, if not more. So we've set our eyes on, we're a little over $1 billion today, and we have set our eyes on the next $1 billion. So thank you very much. And with that, I close the pet care session.